Welcome, everybody. I'm excited to have you both here. As always, we're producing the show as an educational component for our clients. Blockchain and crypto assets certainly are new technologies by technology standards, but they are in their infancy insofar as the utility and the mainstream use of the technology. So what we've organized today is a discussion with somebody who is certainly a crypto pioneer and a world authority on the subject, William Quigley, as well as Nicole DeRosa, a personal tax expert, to help educate our clients about the tax implications of these investments. For a little bit of background, Mr. Quigley is a managing director of Magnetic, a crypto-focused investment fund. He's incubated and invested in more than 30 Bitcoin, blockchain, and cryptocurrency-related investments, including as a co-founder of Tether, currently the fourth most valuable token in the world with a market cap of $69 billion this morning. Prior to his involvement in blockchain, Mr. Quigley was a technology-focused venture capitalist and an early investor in some leading Web 1.0 era companies, including PayPal, NetZero, MP3.com, and GoTo.com. Welcome, William. We're happy to have you here.
Yes.
And where are you in?
Right now I'm in Europe. And
that's a beautiful thing. I hope you're enjoying yourself. We're really glad you're able to make some time and talk to us this morning or this evening, depending on where you are. I'd also like to welcome our other guest, Nicole DeRosa. Nicole is a CPA with WIS. We absolutely love her. She's been fantastic. By background, in 2015, Nicole was awarded the 30 under 30 by the NJCPA, which recognizes young professionals who are making a name for themselves in the New Jersey accounting landscape. In 2019, she was awarded the Women to Watch Ovation Award, which applauds the growth and success of female members for their leadership, potential, contributions, and commitment to fostering the success of their colleagues. Most recently, Nicole was named to both the 2020 and 2021 editions of NJ Biz's Power 50 list, which accounts for the most influential men and women in the accounting profession. So welcome, Nicole.
Thank you for having me.
Absolutely. We're glad to have your expertise here. As you can imagine, all of our listeners, those that are listening on our client side are going to immediately raise the question, what does this do for my tax situation? And so it's something that we're happy to have your expertise on, and we're looking forward to getting into it.
So I love talking taxes.
Yeah. We're the life of the party. So on to the guests. What I like to do at the beginning of this is get an understanding of a baseline of where you are today, right? So William, not physically where you're located today. What's been interesting you these days? What's been keeping you busy? And what are the things that are interesting to you now?
I'm really only focused on blockchain and crypto for about the last 10 years. From that perspective, I really am only interested in blockchain and crypto. Within that space, there's three areas that I broadly focus on. The first, of course, is NFTs, non-fungible tokens. I built the first dedicated NFT blockchain that's called Wax. I think today is number 1, 2, or 3 most transactions of any blockchain. And NFTs are going to be much, much bigger than just artwork, which is what you today. The next is DeFi, decentralized finance. We can get into what that means, but initially it's really about getting cryptocurrencies to behave in ways that would be mostly familiar to people who are used to traditional financial services, publicly traded stocks, bonds, that kind of thing.
Sure.
And then the last area is in the linking of consumer products to blockchain. There's something that I've invented called Viral, which stands for virtual plus in real life, VIRL. And a viral NFT is an NFT linked to a real world consumer product. And I believe that most of the world's consumer products will have digital twins of those products, probably within 10 years. And those digital twins, I suspect, will all be blockchain-based NFTs. So those are probably the three areas I'm focused on.
Those are fascinating, and I can already tell that our clients will be smarter after listening to this, as well as me. I'm a glad beneficiary of this conversation, and we're happy to have you here. Nicole, what about you? What's been interesting for you? There's no change in the tax front, is there?
I'm just going to smile and laugh. So obviously right now we're looking at and digesting kind of the proposed, budget reconciliation legislation and the markups and all what's going to ultimately shake out from that. So really we're just trying to help, figure out what's coming and then obviously digest it and then communicate it to clients and just prepare them for the impending I'm sure we'll talk about in a little bit.
Absolutely. And,
All
and
tax changes.
yeah, I know. And there's got to be many. I think today we're going to try to focus a bit on the specific to currency trading, long-term capital gain, short-term capital gain type stuff, but we'll have more content for those that are interested in the others. William, I definitely appreciate the background, and I know you threw some terms in there originally that I've heard and I've heard before just by the nature of what I do for a living, NFT, DeFi. For the benefit of a good portion of our listeners, I think it's beneficial for us to start a little bit higher up, like 90,000 feet, in dealing with some of our clients that have heard of blockchain and have heard of cryptocurrency. They're aware of it. They've probably seen the meteoric price rise and they're interested in it. They just don't understand what it is at its core. And so, for the benefit of those clients and those people that probably have been a bit afraid, maybe to ask the question or do that research, can you help to educate what is the blockchain technology? And why should any of these people care about it?
Yeah. And by the way, everyone can be forgiven for not knowing what blockchain technology is because it's rarely explained in a way that even I find comprehensible. And depending on the layer of understanding you want to have, at the highest level, it's not so hard to comprehend. When you get into the nuances, it gets a little more tricky, but let's do the high level.
Mhm.
So a blockchain is something so basic that when I say it, you'll say, what is the big deal? So it is a spreadsheet. It's a special type of spreadsheet. That's all it is. And in accounting, we have this concept of double entry bookkeeping, where when you make a journal entry, for those of you who are accountants, as a debit, you have to make an offsetting one as a credit. So I only mention that because blockchain is essentially a triple entry ledger.
Okay.
And for those of you who are accountants, you'll say, oh, that's cool. For those of you who aren't, you can avoid trying to digest that. But the main thing is think of it as an Excel spreadsheet where there's a list of accounts, account number 1, 2, 3, 4, 5, 6, going to, infinity. And next to each account is a quantity Bitcoin. If we're talking about Bitcoin, which is probably the easiest. Anytime somebody wants to transfer one of those Bitcoin to someone else, the ledger gets updated. Account number 1 sends a Bitcoin to account 2. The ledger will show one fewer Bitcoin in account number 1 and one more in account 2. That's blockchain. So if you understood, that's half of it, believe it or not. All right. It's not hard. And I'm sure people are saying, why is this such a big deal then? Well, there's a little magic that happens. So this spreadsheet can be updated by anybody at any time, and yet it's always correct. So that's interesting. Anyone who's ever tried to reconcile any numbers knows if you have more than one cook in the kitchen, it goes awry. But this has special properties, which allows it to be useful for many things beyond just moving Bitcoin back and forth. And that is something called this decentralized consensus mechanism. And it's a way of people who don't know each other to operate this spreadsheet anonymously if they want to be, and approve transactions between people. And in this magic called the consensus mechanism, all the approvals are always correct. So if somebody looks in their account, they don't see 10 Bitcoin being removed and going to someone else they didn't want to go. It never happens. And that's because of this mechanic called the consensus mechanism, where you need a certain number of people to say, I approve that transaction. And these people don't know each other, but they all follow a set of rules. And when I said anyone's allowed to update the spreadsheet, that's true, but they do have to follow the rule book.
Okay.
And the rule book's simple. So as long as you follow the rule book, the transactions get updated every 10 minutes. So that is what I just gave you was that's like the mechanics of this. I always start there because I want people to say, that's whatever. That's no big deal. But you need this. That's what I want to hear. I want to hear people to say, this is simple. That's where you want to start. Now,
That's our response.
Man,
Just to be very clear. And that's the response on behalf of all of my clients that don't understand this. They're going to do the same. I don't get it. Meaning,
but
I
they get
understand it. I don't get the big deal, which is really leading to my next
right.
question, which is like, why does anyone care about this?
So I'll give you another thing which may seem to counter what I just said, which is the blockchain is the worst possible way to do virtually anything. Okay. With the caveat, there's actually 5 caveats, and maybe one day it'll be 6 or 7 or 8 ways. But right now, I think there's about 5. And the 5 things it does so well that there's no equal technology ever invented. And it does this for applications that are global and gargantuan in size. So now you say, okay, so the first one of those is I'm a venture capitalist. I was supposed to invest in big deals, things that could grow to $100 billion market caps. If somebody had come to me and said, I want to disrupt the dry cleaning industry, I might take a look. I want to disrupt the software industry. That sounds big and interesting. How about I want to disrupt money? I want to disrupt money. Okay, that's about as big as it gets. That's what Bitcoin has done. Because because this spreadsheet has these little tokens in it, and the tokens have value that we assign to them, you can be sure that when you receive a token, that token is not fake. That's a very valuable thing to any economist. You spend no time, you instantly know it's authentic. Now, just think about that for a second to the audience. Is there anything else in the world? I haven't found it. Anything else in the world where you can, when you receive it, know at no cost instantly that it's genuine? Come on, something that has value. A dollar bill or $100 bill? Of course not. There's tons of counterfeits. Diamonds, good luck. First of all, most of us wouldn't know a diamond from a nice, shiny piece of glass. And secondly, you've got synthetic diamonds now that can't even be assessed as genuine. It's only statistically likely that they're genuine. And then, of course, my favorite being gold. Of course, you have the local assay office on speed dial, right? Who probably not. And if they are going to assay your gold, it's going to take a week, if not more. And are they legitimate? Are you being defrauded? Who knows? Those are obvious things, but you cannot, for most things. How about a stock certificate? How on earth would if that were genuine? The reason you trust when you have in your account a Facebook stock certificate is not because you have a piece of paper. It's because a third party named Morgan Stanley says to you, that's the real stock.
Correct.
And you do what? You trust them.
Correct.
So who does Morgan Stanley trust? They trust the New York Stock Exchange or NASDAQ. And who do those guys trust? They trust the company's treasurer or whatever. So there's all of this trust, right? Trust is expensive. Trust requires auditors. Trust requires security protocols. Trust requires sometimes audits. Now, imagine that you can eliminate trustless transactions. The concept of trust goes away. I don't need to trust you because I know what you're giving me is real. Now, if you start to imagine, as I have over many years, what requires a lot of trust, and trust either takes a lot of time to acquire, which is expensive, or trust requires a lot of checking, which introduces friction. So imagine all of global commerce not requiring trust. And that's why we call it a trustless system. It's trustless because the mechanics of a blockchain are, as long as you follow these predetermined software-based rules, everything works according to plan. And by the way, it's conceivable that there's a flaw in our logic. And one day someone will say, actually not true. I can figure out a way to hack Bitcoin. But it's been 10 years. Bitcoin now it's gone from worth near $0 to $1 trillion. Another $1 trillion of Bitcoin copycats. No one has found this flaw in our logic. So that's another way to think about it.
I was channeling some of my clients in thinking, Okay, this is fantastic. This is a great way to get understanding around the topic. And so definitely appreciate this. You had said we we have a spreadsheet in our most basic way of thinking about this, and anyone can adjust the spreadsheet at their discretion, or theoretically anyone. And now it begs the question that I don't think we've gotten an understanding of yet, which is how do we protect against the bad actor? What stops me from going in and saying, I'd like one of those Bitcoins. So I'm going to alter the ledger to add one to my, account number and take one from your account number. So what's the protocol that's in place to give the security to the spreadsheet? And what are those protocols that are required by the other actors to verify?
So it's very important you ask that question because you're not the first. In fact, hundreds of years ago, the people who first had this question put a name to it. It's called the Byzantine general's problem. And the Byzantine general's problem is how does the Byzantine general, who has 10 lieutenants, who he has trusted to report to him on what's going on in the battlefield, how does he know that what they're reporting back to him is real? What if they're spies? What if they're conflicted or whatnot? So this idea of needing information that's highly critical information, but also needing a way to trust it beyond the things we talk about, the verification audit in the middle of a battle. You can't go and send the audit team to say, are you really giving me the right information? Can I go and validate it against some third party document? It doesn't work. So this problem of how do you, since you've assigned many people the ability to update the spreadsheet, how do you know they're just not going to change it so they put all the Bitcoin in their account, right? This particular podcast probably is not the one where we could go into, it's basically a math problem. We can go into that. But suffice to say that there is a penalty you pay if you provide bad information. That's one way to think about it. And the other way to think about it is one person ultimately validates the transaction, and then an endless number of people confirm its authenticity. And as a result of that, imagine you're doing a math problem and there's 50 PhDs in the room. You think you know the answer, but you want to check. And then some guy's hand goes up and he says, the answer's 34. And then another guy says 34 and another guy says 34. But here's the thing. None of them hear what the other guy is saying. So each of them is saying 34, 34, 34, but they don't know each other. So you and I would say, I think it's 34. And then someone else says 34. Now, if we got 50 random people around the world to report back, I think it's 34, and none of them know what the other one had already reported, you and I are going to say by 50 people, we probably got the math problem right. So that's an element of how this works. There's verification. And most of us believe that once you get 50, it's verified. By the way, it never stops getting verified. So that first Bitcoin transaction has been verified millions and millions of times, because when you verify it, you're basically verifying the entire blockchain. It's a chain of blocks. Because we wouldn't have time here to go through all of the intricacies, suffice to say that there's a method to ensure that even though we've distributed the ability for people to update the spreadsheet, their work is constantly getting checked. And it's worked so far, billions and billions of transactions over years and years, and no one yet has figured out a way to spoof it.
That's a fair answer. And I appreciate the length necessary to actually respond. And that is what I would say is good enough for this podcast. And we definitely appreciate it. If I think about the clients that we're trying to educate here, they're worried about theft originally, right? The security of this. And I think we've addressed some of that. And then this creeps in and it's, wait, I'm going to trust this. And there's a farmhouse in the middle of nowhere or in a location I don't get. So can you just talk a little bit about what those are and then the efficiency of the actual protocol and your thoughts around Bitcoin specifically as to its utility as a payment system and, what this actually is?
Sure. And again, I like these questions because these are the fundamental questions that everyone first asked. Certainly, I first asked. And remember, I started my career as an auditor and I worked in a bank and I worked on blockchains in a bank. We used what's called hash totals. We didn't want to recalculate every number from every deposit, daily deposit over years. So we would hash it and use a summary number. I was familiar with this. What I wasn't familiar in the genius of Satoshi, the person who invented the Bitcoin blockchain, was they did one little trick. They just added one thing. They attached a reward system to this called the Bitcoin. And so if you participate in processing or validating transactions, you have a chance to get rewarded with some tokens. Started with, for every block of transactions, and a block takes about 10 minutes to process, 50 Bitcoin you were given. That would today be worth $2.5 million. So for 10 minutes of work, not bad. Of course, it wasn't worth that back then, but still, if you held it, it would be. So the efficiency argument, wow, you're right. This sounds like a lot of work to process a transaction. Remember I said at the beginning, a blockchain is the worst possible way to do just about everything? And I think it is. If, for instance, you fully trust, let's say you and I have corporations and we only work with each other. You have a server in your corporation with a bunch of transactions and records, and I have one in my corporation. And there is a dedicated line, telecom line between our servers, and we only work with each other. And we're good friends. And we trust each other. You know what? There you have it. You've got trust baked in. Would you need to go farm out all these random people validating a transaction? No, we'll do this. What I would say is the scenario I just described would be the rarest element in the universe. It is rare where any businesses of any size can truly fully trust the other business. And we're not talking about nefarious activities. We're talking about errors or accidental omissions or third-party bad actors infiltrating and changing, right? So the truth is, there isn't that scenario. But if there was, it's super efficient. But it's super efficient because there was trust. And then I would say, how did you and I get that trust? Over 30 years of knowing each other, of going to school together, of doing small deals, larger deals, and then still larger deals. So what was the cost of a lifetime of trust building? It's hard to put a number to it, but the point is it was a big cost. So when we look at Bitcoin and when we say, wow, it's this real, all these process, it's inefficient. What it really is, it's fully internalizing what it takes to have trust. Everything around us is externalized. The reason why I trust Amazon is because over thousands of years, we have invested in things like property rights and law and court systems and ways to actually resolve contracts and disputes. It turns out there is a massive cost going back millennia that has been invested in and is still paid for everything to be trusted. So we just don't see it. What Bitcoin does is it's a closed system where literally the entire cost is visible. And I look at it and I say, compared to everything else that requires trust, it's trivial. I ask you this, how much did Coca-Cola invest in its brand? A brand, by the way, is just trust, right? Why do you buy that? Because you trust that brand. When people spend money on marketing, it's like just burning the money because it just goes away. It's not like, it doesn't get put in a bank anywhere. It's just spent. They have spent 100 billion, I don't know, 200 billion over 100 years to get you to say, I like that. And I know that what I'm going to taste is consistent with what I tasted in New York. Here I am in LA or whatever. So let's establish that trust. It seems like Bitcoin has a lot of expense and a lot of operations and inefficiencies. That's simply because we've fully internalized it. And
That's beautiful.
I would argue, thank you. I would also argue that let's compare two things. the value of a Bitcoin and why I will accept today. I will send you $46,000 if you send me a Bitcoin. I will do that without question. And okay, would you accept $46,000 of $100 bills? You'd probably say, sure. But what is the cost of you being comfortable with that? First, let's talk about a $700 billion annual defense budget, because the United States currency and its value and the ability for it to do what it does economically and globally and protect the sea lanes is all dependent on $700 billion. And I would argue that's actually a small real percentage because those people had to be educated and all that. But call it 700 billion a year, that's just one small piece. And then, of course, as I already talked about, these court systems and state level courts and rules of law, all of those things are the reason why you're willing to take that $100 bill. Are you willing to take an Afghani unit, whatever they call theirs, $1? No, because you don't believe that system has the protections to ensure that unit of account from them is going to be worth anything. You don't even know if it's been counterfeited. So Bitcoin's remarkable there. Bitcoin costs almost nothing relative to the cost to maintain the value of a dollar.
That's a very fair point. And as I mentioned, I really do believe that was a great answer to the trust and value and trust and the cost of those things that we don't see and we don't pay attention to because we haven't evaluated it that way. I could say none of my listeners have evaluated that way. So that was, I appreciate that answer very much. The way you spoke, I don't know if you were leading me to this, but you talked about the US dollar, the trust in the US dollar. And do I trust the US dollar versus the Afghani dollar versus some other asset, right? There's an innumerable amount of assets that I could hold today. And where we sit right now feels as if there's some inflationary characteristics right here in the US. And with respect to the US dollar and the state of the economy, it's no surprise that the line, everything is more expensive, has been thrown around like crazy lately. There's signs when I go to a restaurant in the window of a chain restaurant that we're keeping up with, the time. So for people that are investing in Bitcoin as well as other altcoins and other cryptocurrencies, should this be something that's viewed as a hedge against that inflation or a potential hedge against that inflation? Or how should they view these assets as utility in their portfolio?
Another question, which, by the way, I've pondered for years. So I'll give you the Cliff Notes version there because it's a good one. Blockchains were initially rolled out as with the thought being that they would be money substitutes, payment systems, and money substitutes. I would argue that Bitcoin, the granddaddy, is the worst possible payment system ever invented. You would never want to have such a system like that unless you literally had no government anywhere and you couldn't trust anybody. Remember, we do trust people a lot. So when we can, we do. But so Bitcoin, suffice to say, Bitcoin, for a number of reasons, it's slow. No one wants to wait 10 minutes to check out of Amazon. It is problematic for its volatility. It does move a lot. Now, it turns out, of course, if you're a foreign currency trader, all currencies trade relative to each other. They move constantly against each other, but they don't move very much. And it's a fair point that Bitcoin moves a lot, right? That's not a good trait in a unit of exchange where you're not even sure what you're getting because it keeps moving around. So I'm the first one to say Bitcoin is not a good payment system. Everyone who comes into Bitcoin, like Elon Musk, let's say, new to it, right? He didn't know anything about Bitcoin until a few months ago. They buy into this as say, oh, it's a really cool way to pay for things. I just explained two reasons why it's not. And then there's a third reason that your local tax accountant will tell you every time you spend that Bitcoin, because it's not treated by the IRS as a currency, it's treated by the IRS as property. You have either a short-term or long-term capital gain. Imagine getting money in and out of your wallet all day long and having short-term and long-term capital gains that you need to report to the IRS at the end of the year. It'd be impossible. So that's the other trait that makes it not so great. Now, it turns out there's another division of the federal government, the US Treasury, that does consider it a money substitute, but the IRS doesn't. That'd be another reason why you would not want to use it. That's why I invented Tether. Tether is a derivative of the US dollar. What we did is we created a copycat, basically, version of the Bitcoin blockchain and said every token we mint has to be backed by a dollar. You give us a dollar, we send a token out. So it's literally every token out there is backed by a token, 69 billion US dollars tokens, $1 token. And so the reason that's good is we were able, with our blockchain, we made a few changes where it doesn't move the token because it's a dollar, it's treated as a dollar. But the other is it can be done a lot faster than every 10 minutes. It can be done in under a second. So you can send this stuff back and forth and you don't pay. In Bitcoin, you could pay $50 for a transaction. Can you imagine spending $10 on something and paying a $50 fee? Of course not. That's why Bitcoin, if you are going to buy anything with it, make sure it's a very expensive thing. With Tether, there's no fee. So there's no fee. It's much faster. And it's as though you're sending a dollar. Think of it as putting a dollar bill in this electronic envelope where you don't have to go through banks. You don't have to go to PayPal. You don't have to go through a credit card company. You send it to another person directly as long as they have access to the internet. So that's a cool system. There's no 9 to 5 operating hours. And it's 24/7, 365 days a year to any person on planet Earth who's connected to the internet. You can send them US dollar equivalents. That's a cool thing.
That is absolutely a topic for another podcast and discussion. The unbanked population globally is massive and something that I've only recently learned about within the last year, but certainly something that is worth discussion. And as we talk about these things, there's so many, you could see how broad this topic is. You could see, I appreciate just how broad it is. So far, we've talked about Bitcoin and we've talked about Tether as a stable coin. And there's this universe of altcoins that are out there. There's the NFT market. There's all these things. Can you help the listeners understand why the need for these alternate coins? Why the need for others? So we understand now from the origination of this talk that Bitcoin is an lawful payment system, and nobody would have derived it originally as a payment system unless there was absolutely no trust. So we have some of those things. And so now, how does that spawn the market? And then additionally, something that we didn't really get to exactly, and I'd like you to address a bit is, can these things be used and thought about as an anti-inflationary mechanism for investors? Or should we be looking at them some other way to actually generate yield while we're in these assets?
Sure. To the first question, why do we need so many of these? So I will just first answer it by saying it's the second time in my life I've had this question posed. I started with 2 partners, the world's first dedicated consumer internet venture capital fund. And when I started that, most investors in the world thought that the internet was a fad and was definitely not a place you'd want to put your money. And the main reason was these companies aren't backed by anything. They don't have any financials, any revenue. In fact, they don't have business models. They don't even have a business model.
It's the total Bears model business plan. It works.
If you can still look at S1s filed in the 90s for consumer internet companies, some of which have gone on to be very big, where in the risk section was the statement, this company has no revenue. The management team has no experience in this area. And the management team has no idea what their business model will be, let alone today and definitely in the future. So, and those got valued at billions of dollars at IPO. And by the way, there are times to take a leap of faith. And I will give you such a company when it started. Google had no business model. There were dozens of companies that were indexing the web and providing that index to people. But search was deemed a non-commercial business. There was no way to actually exploit it until my partner, Bill Groats, came up with the concept in a company called Go2 of what if I ranked searches based on how much you pay? And that was, you can go look online, 1997, I think. That idea was excoriated. What a terrible idea. You're distorting the search results just by what people pay. And Bill had a great answer to that. He said, when you open up a phone book, now people don't do that anymore, but when you open up a phone book, there's tiny ads and there's really big ads.
Fair.
The really big ads send to you an indication that this company must have decided to pay a much larger amount. It must believe it's going to get customers. Maybe it's had customers. It must have more faith that you're going to trust it. So the bigger the ad, the more likely you're going to use that. In the same way, he said, no one's going to pay to be high ranked with searches if when you click on it, you think it's a scam and you don't buy their product. So the best companies are going to wind up being ranked at the highest because they're going to pay the most. And Go2's number one customer for several years was Amazon. There you go. So I say that because the things I hear about blockchain are the same things I heard about the early days of the internet. It's a scam. By the way, none of the incumbent companies in travel, in music, in banking, in content, retail, none of those incumbent companies went to the web, or a few of them did, but very few. It was mostly brand new startups that said, hey, we're going to try this. Just like blockchain, the investment banks and financial service companies of the world didn't jump in 2009 and say, wow, this is great. They all said, nah, we're going to hold on. So it was young upstart companies that did it initially. And it took a while, but we eventually figured out how to create things that are real. Now, to the question, why are there so many of these? Why do you need them? That was a question I had. I think when we started our fund, there were about 2,000 websites globally. And the question I got was, why do we need another website? We already have a website that allows you to check sports information. We have a website that allows you to buy products. Why do we need another one? And maybe it was just me, but I thought it was such an absurd question. I said, how many restaurants are there? If you call broadly food just food, why don't we just have one food company? Why do we need more than that? Or better yet, why doesn't one restaurant sell tacos and pizza and lasagna and Chinese food and ice cream, and donuts? Why? It doesn't make any sense. It just turns out that's not how humans are.
Right.
We wind up wanting something and we want it a certain way. We don't just want a car. We want an electric car that's really cool. So we can't buy that cool electric car from most of the other car companies. So we go to Tesla. Just like we want a taco. We could go to McDonald's and McDonald's can sell tacos, but that's not their thing. We would prefer to go to the place that sells tacos and makes them tasty. That might be whatever, Del Taco. When it comes to blockchain, the same principle applies. You might want a blockchain that does a really good job of allowing you to transfer media files like images. Turns out Bitcoin doesn't do that. Now, Bitcoin could do it. It would do it poorly. Or in the case of the second biggest blockchain on earth, Tether, or Ethereum added something called a smart contract. So basically, they allow you to program what the token's going to do. Bitcoin, theoretically, can also do it, but it wasn't purpose built to do that.
Right.
And since it wasn't purpose built to do it, it doesn't do it well. So you say, okay, I see Bitcoin's not great for payments. You got Tether. Good. Bitcoin's not great for smart contracts. You got Ethereum. But what about all these others? I mentioned one that I've worked on. Wax does a really good job of allowing you to transfer NFTs. What about things like supply chain management? Turns out there's enough specialized things with regard to supply chain management that, again, Ethereum or Tether or one of these other chains could do it, but they wouldn't do it well. So a team decided to be purpose-built. Just there's a group of people who decide to create really tasty tacos. They could make hamburgers and they could make pizza, but that's not their thing. So you can see why I find the question odd, because in this world we live in, you go into a shopping mall and there's 100 stores that sell t-shirts. They're all slightly different. And humans like that variety. And so when I did the investing in internet, I said, I think there will be not 2,000 block internet sites. I think there will be millions. I should have said billions. Uh, so there are today maybe 10,000 or so reasonably well-known blockchains. For your audience, you may think that's a large number, but there will be as many blockchains as there are humans on this earth. That's how many there are going to be. And that's because that's how many internet sites are.
Right.
And every one of them can do something differently. And think about it this way. What do you spend your time and attention on? If your Tesla, you spend it on battery technology and maybe a user interface, that's not something that Porsche spends its time on. It spends time on the suspension and maybe the frame. And so you only have so much time to spend. The auditor become a lawyer, sure, and he could become an architect, but then he'd probably be doing all three not well. So think about it that way. Do you like specialized technology? Of course you do. And you need teams to work on that only. And that's the reason you have many different blockchains. And eventually these blockchains will be interoperable because, of course, that's something we do in the technology world. Your iPhone works with the speaker system and it works with the apps. Same way blockchains need to be interoperable. They'll get there.
Right.
We're at a primitive state. So that might have been a long way to say it, but hopefully it conveys the point.
Yeah, if a dummy like me can get there, it's certainly very good. And so appreciate that answer as well. It was excellent.
Yeah.